and thank you for tuning in to New Level. As promised, we have our distressed debt purchasing video that I previously mentioned a couple of weeks ago. So I'm going to show you how we use $200,000 to control pretty much $5 million of real estate. Now, we don't own $5 million of real estate, but we control it. Okay, so we're going to walk through it. First of all, what is distressed debt? All right, so the word distress means in trouble, right? You need assistance, you need help, you're distressed. And we know what debt is. Debt is borrowed money, right? So there's credit and debt. And depending on what side of the balance sheet you're on, credit can be an asset and debt is a liability. Now there's good debt and bad debt, but we have plenty of videos for that, so go back and check those out. So what is distressed debt? So we just talked about it. It's basically debt that is in trouble, right? Now, I have examples of different debts out there that could be distressed, right? So auto loans, right? Let's think about it. You purchase a vehicle. Most of us finance our vehicles either through a bank or a credit union or at the dealership themselves. And if you miss one or two payments, right? Let's say you're doing well, you got a job and you lost your job or you got some hours cut and you miss one or two payments, that debt now becomes distress, right? The finance company or the car company says, you know what, Mr. Newsom, you've missed the last three payments of your auto loan. That your debt is distressed and you're in fault of having your car repossessed, right? There's credit card debt, same thing. You have credit cards and you run up the credit card, it becomes debt now. You miss a few payments, you are in default of your agreement to repay the borrowed money. Mortgage debt, right? You take out a mortgage for your home. You miss a few payments, now your home is in foreclosure proceedings. So these are all examples of distressed debt. So that's 1, 2, 3. Number 4 is property tax, but we're going to get into that in a second. And number 5 and number 6 are the biggies, right? So corporate debt. Think of Apple. They sell bonds for bond investors, right, to be able to invest in the company. So instead of selling equity for the company, they say, listen, we're going to sell you debt or some bonds and we're going to pay you a guaranteed interest rate, right? So that's considered debt. It becomes distressed debt when obviously the company, Apple in this case, gets in trouble and they can't repay the interest plus the principal that they promise to the investor. And government debt can also be distressed debt. Think of companies like Zimbabwe or Greece a few years ago. These companies got in trouble. They're just like corporations or just like individuals. If you take on too much debt and you don't have the necessary income to repay the debt, you become your debt becomes trouble. Now, number 5 and number 6, there are several companies that are billion-dollar companies and all they do is buy distressed debt. Okay, they raise money. They bring in money in their firm and they go buy debt just like they would buy real estate or just like they would buy stocks or buy other companies. They do distressed debt. So what I participated in a couple of weeks ago in DC was number 4, property taxes, right? And this is property taxes throughout all of Washington, DC, not just residential, but you have commercial, you have parking lots, you have vacant land, anything that's tied to real estate, and the debt, in this case, the property tax is distressed, gets auctioned off by the city. So example, let's say Mr. Newsom owns some property in Washington, D.C. There may not even be a mortgage on the property, but every year you're required to pay property taxes. This is throughout all states in America. You have to pay property taxes on the real estate that you own. Some states charge a little bit more than others, but all states charge property taxes. Okay, so even if you have the mortgage paid off, this is required every year. And if you miss payments on your property taxes, it becomes distressed debt. Now, property taxes, I believe, becomes the number one lien on the property. I believe it even beats the IRS if you owe federal income taxes. I believe it's the first lien on the property. So even if you try to sell the property, you have to satisfy your property tax debt. That's why investing in distressed debt when it comes to property taxes is almost looked at as a risk-free investment, right? Because you really can't lose your money especially in a city like Washington, D.C., because the city is so small that it didn't take long for the city to become very expensive across all wards. At one point, it was just, kind of invest in Northwest. Then it kind of spilled over to Northeast. But now it's all the wards, right? Even east of the river, Ward 7, Ward 8 has become a very lucrative real estate market. So all properties in DC pretty much are lucrative. So here's how the process works. As a owner of property, if I miss my property taxes, I am now in default. My debt becomes distressed. The city says, well, listen, quote unquote, we pay our police officers, our firefighters, our school teachers using property taxes, right? This is revenue that the city collects. So if a homeowner or a property owner misses these payments, then we can't pay our employees, right? That's what they say, but that's for another video. So they say, well, business still must continue. So what we're going to do is we're going to sell your debt to someone who wants to purchase your debt, an investor, right? We're going to sell this debt because we still got to pay our employees, these teachers, the firefighters, the police officers. So we're going to sell your debt to an investor. Now, by doing that, there's two things that will happen for the investor. Either A, the investor is going to get paid interest, right? Because once my property tax debt gets sold, okay, I, as the owner, am obligated to pay still the city for this old debt, right? And in addition, I have to pay the interest penalty, which goes to the investor, right? So either A, the investor is going to get interest, or B, if I do not pay, then the investor will get the first right of the property for foreclosure. Okay, so this is how it works. You have the property, right? But again, commercial, residential, could be vacant land. Okay, plus the government, because as an investor, I'm going to do business with DC government. I don't talk to the owner at all. I do nothing with the owner. Okay. I paid, when we participate in the auction, I paid $200,000 to DC government to be able to buy the debt of property in the city. Okay, so as owners start to pay back, let's say they get their income tax refund. Okay, and they say, okay, you know what? I got some money. I can pay off my debts. They pay as they redeem. I collect interest 1.5% every month. So on an annualized basis, that's 18% per year. Now you got to ask yourself, where are you going to get that type of return? You're definitely not going to get that, having it sit in your bank account, right? So this becomes almost a risk-free investment. As long as you do your homework, there are some risk, and I can do another video to kind of talk about the risk out there. But there are a few risks, but for the most part, it's kind of risk-free if you do it right. All right, so that's pretty much how the process works. Last point I want to make. Now, you might say, why would companies, be involved in buying distressed debt? Like, how does that really work? Okay, let's say you have an auto loan, all right, and the bank financed that deal, right? Now, the bank. Your auto loan for the bank, I'm just going to make small numbers right now, is $100, but you don't make your payments, right? So you owe $100. The bank is not in the business of selling cars. They sell debt, get interest. That's how banks work in the simplest form. So they really don't want to repossess your car because they're not car sellers. So what they're going to do is say, okay, you know what? I really don't want to repossess, but I'm going to have to repossess. But this is what I really want. I want to collect this $100 that is owed to me plus the interest. So they're going to say, you know what? If I can't call Mr. Newsom, I've called him several times. It's been several months. I can't get in contact with him. They're going to sell the debt as distressed debt for pennies on the dollar. So as an investor, the investor comes in and says, you know what? Okay, I think I can collect the money better than you can, bank. I'm going to use, my resources. I'm going to find this individual. I'm going to find family members. I'm going to find where they work, and I'm going to do everything I need to do. So their goal is, hey, I'm going to pay 20 cents on every dollar. So in this case, $100 would be $20. Okay, I can buy this entire debt package for $20, And if I collect $25, I got a $5 profit. And that's the entire game of distressed debt. You just buy for pennies on the dollar. Okay. Now, buying property taxes is slightly different because you're not getting a discount on the debt. You're just getting a really good interest premium. Okay. So you're going to pay the full amount, the full debt that is owed, right? Let's say for this one property, the property tax is $5,000. You're going to pay the $5,000. You might even have to pay a little premium because there's other bidders out there, there's other investors, right? But you're relying on that 1.5% interest return every month. Okay. So that's the game. And like I said, there's debt on all kind of levels. Auto debt. This is basically what you would call consumer debt. Then you have your corporate debt. Each company pretty much on the stock market that sells equity, they also sell debt. And then you have government debt, and these are the big ones. Okay, so this is where the big players live. But there are million-dollar companies and probably even billion-dollar companies that participate in this property tax as well. So there's a lot of heavy hitters, and that's what I was explaining in the previous video that my 200 was going up against some really big money. But right now, as it stands, we do control $5 million worth of I would say distressed debt, okay, which translates into different properties throughout DC. Okay, so the point of this video is we will be putting a fund together for next year, so we can really compete with the big boys. So if you're interested, please reach out. You can give us a call. You can send us an email as well. We'll have our information in the video. And thanks for tuning in. Bye.